Hi there, my name's Eric. My nickname's Irked, and I've been investing in stocks since 1998. In this episode, I wanted to show you how I got some great deals on some of my favorite positions this week during Monday's pullback. Along those lines, I'm also going to show you how they all finished green, except for one, which I bought after earnings. I didn't buy it during the crash. But the rest of them, and I'm not cherry picking, this is all the buys I did, all finished in the green. First off, let's take a look at Dow Chemical. I bought Dow on Monday for $51.01, and it ended up dropping all the way down to $50.40. But by the end of the week, it finished up 3.23% from where I bought. Now, out of all the positions that I'm going to talk about, this is the least gain from where I bought it on Monday. And the reason I added at that level is if you look at the past, you can see there's consistent support here in the past, and it was highly likely that it would find a level there and bounce. Now, it pulled back below that level of support, but I put some money to work. I had taken all the profits out of it over time. So for me, it was just a matter of adding some profits back in. The next stock we're going to talk about, the next biggest gain that I had, or the next least gain that I had, is UiPath, a position that I opened earlier this year because of its AI play. Now, when we zoom in on it, you can see that on Monday, I bought at $10.47 a share. It pulled back to $10.37 a share, but by the end of the week, it finished up 8.56% a share. That's not too bad for what I put into work on Monday. Next up, we're going to take a look at the big one, Nvidia. Now, if you've been watching my channel for any length of time, I've talked about how I've held Nvidia since 2016, and it regularly pulls back 40%. This week, it had pulled back more than 30%, and it filled two of my buy orders at the open on Monday. However, my buy orders were at $101 and $95, and when it opened, it was at $92.06. It pulled back to $92 where my two orders filled, so I got a discount because I used limit orders. That's the secret, and I'll talk a little bit more about that later. On Monday, you can see that Nvidia did pull back to a low of $90.69, but by the end of the week, it finished up 13.86% from where I bought. Now, let's take a look at another AI play, Snowflake. In Snowflake's case, I bought at $109.15. My limit order was actually at $112 and change, but since Snowflake opened down here at $107.93, my limit order activated, and by the time it filled, I got $109.15. Not bad. It's lower than its all-time low. Snowflake's all-time low was around $110. So I actually was able to get a limit order filled at lower than its all-time low, which is great. By the end of the week, Snowflake had rallied, and it finished the week at 13.98% higher than where I bought. So that's not a bad turnaround either. Next up, we start moving to some of the bigger gains, Shopify. Now, I wanted to add to my Shopify position, just like some of the other ones I mentioned. My limit order was actually placed at much higher, but it opened at $48.56. By the time my limit order filled, it was $50. And from that point to the end of the week was a gain of 38.65%. Now, I had somebody on X tell me that I was lucky because Shopify ended up reporting a good earnings report, but that has nothing to do with it. As an investor, your job isn't to predict which way the market's going to go. Your job is to buy the stocks of quality companies. And as long as you believe in management, when the stock goes on sale, you buy it. This is the only industry where the whole store goes on sale and the shoppers run from the store instead of buying some. I bought Shopify on Monday because it was down huge. Now, could it have gone down lower? Absolutely. And what would I have done? I would have bought more lower. My next buy is never my last buy, but I must buy at key levels of support because it's likely that it can bounce from there. And this is a great bargain. In this case, Shopify came out, reported that blowout earnings report, and I finished up the week 38.65%. If I had just stood back and said, oh, I don't want to buy, I'm scared it's going to go lower, I would have missed out on those gains. And my time horizon is 20 years. If you believe that your stock will be higher in 20 years than the price is today, then today is a good time to buy, regardless of whether or not your stock sells off lower from today's price. Just make sure you don't buy all at once so that if it does sell off lower, you can buy more at those lower levels. But you must buy. You have to put your money to work. After Shopify, we're going to look at the biggest winner for the week. And in this case, it was Palantir Technologies. It's a very similar story to Shopify. I believe in the long-term prospects of Palantir. So when it sold off and dropped to $21.45, a price that you can see there was support at in the past, I bought at that price with my limit order on Monday. Now, it ended up pulling back to $21.23, but after Palantir reported a blowout earnings report, they ended up finishing up the week 39.91% from where I bought. I nearly made 40% on those shares that I bought on Monday in 1 week. To remind you, a good year in the S&P 500 is 8 to 10%, and I made 40% in a week. Now, could Palantir have come out, reported a bad earnings report, and crashed? Absolutely. But I have faith in the company for the long term, and I was prepared for that scenario. If it had crashed, I would have bought more at lower levels. Now let's take a look at the two stocks that I bought that weren't during the crash, but were instead after they reported earnings, and they reported bad earnings. This is GrowGeneration. It's an incredibly speculative cannabis play in my speculation and play portfolio. So it's not even close to a full allocation like my flagship portfolio, but it's still a position I buy. I think it could come back over the long term, but I'm willing to lose all the money that I have in it if it goes to zero. So I did add at $1.81, which you can see was a point of support in the past. However, it did pull back a little bit further on Friday after bad earnings on Thursday to $1.78. But at the end of the week, it finished at $1.81. So those shares that I bought were unchanged. Finally, let's take a look at another company that reported good earnings, but a bad forward guidance, Dutch Bros. This is a company that I've been following for a really long time because I live in the Pacific Northwest. Once again, I believe in Dutch Bros for the long term. So I had a buy order in place at $27.03. After Dutch Bros reported a blowout quarter on Wednesday, but gave cloudy forward guidance, warning about the consumer pulling back on spending, the stock sold off more than 30% on Friday, and it came down and triggered my buy order at $27.03 before pulling back to $26.96 and finding a bottom. It had gotten so oversold that between Thursday and Friday, buyers came in and bought up the price. So by the end of the week, my shares that I bought for $27.03 ended up finishing up 9.1%. Now, in case of all of these positions, is it possible that the market's going to roll over, crash, and break through the positions? Absolutely. That's why my next buy is never my last buy. It's just my next buy. So the key secret to my strategy here is to do your work in advance and then go onto your broker and place limit buy orders. The difference between a limit order and a market order, which are two of the main orders, is a market order will go in and just buy the shares at whatever the price is. The problem here is if we're looking at a very volatile market like we did on Monday, it's possible that the shares could actually rise, fill your market order, and then crash even lower. So you'll end up with a down position even though you bought when the price looked like it was at a certain price. A limit order is different in so much that you tell the broker, I want to buy shares at $27.03. Let's look at Nvidia as an example. I had my limit orders in advance at $100 and change and $95 and change. And what a limit order does, it means it fills at the price that I asked for or better. So when Nvidia opened at $92, that's lower than both my $100 buy price and my $95 buy price. So both of those lots replaced shares that I had sold at a higher price, but replaced them down at $92, giving me an almost 9% discount off of at least my first limit order. Since I believe in Nvidia for the long term, I've been an investor since 2016, and I've got all of my original capital plus a lot of profits out, I wanted to replace the shares that I had sold more than 30% higher at this discounted rate. Is it possible Nvidia could sell off more? Absolutely. In 2022, it sold off more than 80% from its all-time high. So the trick is to not only use limit orders and do your work in advance, but to look at the past price action in all of your positions and decide where is it you're going to want to put money to work. I use limit orders that I put in advance because I also lived through the flash crash of 2010. In May of 2010, the stock market suddenly sold off more than 10% in less than 10 minutes, and nobody knew why. I was at my desk and had enough time to log on to my broker and was able to buy one stock at an unbelievable discount because it recovered by the end of the day. We still don't know if it was a fat finger error or one British trader who was manipulating the markets over in London. But however it happened, we suddenly got a really quick 10% sell-off. All stocks went off on sale. I was able to buy some, but not a lot. I wasn't quick enough. In order to account for that possibility in the future, I have limit orders on all of my positions at all times. Multiple limit orders, some of them impossibly low. Now, professionals will tell you, oh my God, the market could sell off so much lower. What are you doing? Well, this isn't my next buy. Investors get confused. Your job isn't to predict which way the market's going to go. Your top priority, besides risk management, is to pick the stock of quality companies that you believe in for the long term. And if you have a 20-year time horizon like I do, even a 20% pullback looks like a speed bump. Let's take a look at Nvidia just as an example. If we go to the monthly view of Nvidia and we remove all the drawings and look back to where it came from, even some of its more epic sell-offs, like this one back in 2022, you can see it was 68.79% from the high to the low, but it's moved so much higher from there that is irrelevant. Even if you had bought at the all-time high at that point, even after this week's sell-off, you'd still be up 202.33% from your buy order. The most important thing that investors need to think is it's not timing the market, it's time in the market. And when there's a market-wide sell-off, that means every single stock is on sale. This is not when you freak out. This is when you put money to work. You don't put all of your money to work. You always save some on the sidelines. But for the love of all that's holy, put some money to work. To learn more, check out my Substack, getirked.substack.com.